Hello and welcome to Martyn Lucas Investor. My name is Sensei and you are here watching the morning forecast show. What a day today is going to be. Trump is going to announce the new Fed Chair. We already know who it is. It's Kevin Warsh. So let's start the analysis. Let's also cover Trump and making that announcement. Thank you everyone for tuning in. Please do hit that like button. Please do subscribe. First link in the description is a 1-week free trial to the newsletter. Yesterday, we published entry 1 of the portfolio challenge. Everyone was very excited. We had a live discussion in the community. We'll come a bit more onto that later, but let's get straight into the show. Let's get into it, and I'll explain why I put a 50% crash in the thumbnail. So let's go straight to the markets and have a quick look at what happened last night with gold and silver. What a crazy move down. As I've said, we've literally been spot on with this trade. Remember, we bought this at $20, gold at $1,300. Now we're sat at $100, still a brilliant trade. And it went exactly to these targets. I don't move these targets around. I don't make them up. I don't just, next day I change my targets. Look at that chart. What does it tell you? Well, our first point was $100 level. The next one was 120. We went exactly to that target. I mean, this is incredible how this chart has played out. Gone exactly to $120 and then got rejected. Does that mean we're rejected and we're going to keep falling? Anything can happen. Be prepared for all scenarios. However, I think we are back at this $100 support. I think we can see volatility. I think we can see another unwinding of leverage, maybe even come all the way back down to $80. But I think the key part is if we want to see this really strong move continue and the parabolic move to continue, what we want to see is $100 hold. If $100 hold to a daily candle close, I do expect to take out those previous highs and go on one last parabolic move for gold and silver. But it's a ridiculous drop from last night. In a day, silver dropped 20%. That's essentially the whole market cap of XRP. It's about probably close to 75% of the market cap of Bitcoin. And then when you pair that with gold, I mean, we lost the whole market cap of crypto essentially with this crash. So that's how big this crash was. Gold dropped 11% in a day. I mean, absolutely crazy moves. Gold and silver are trading like they're meme coins. And we love it because when they trade like this is when we make the most amount of money. We went all the way up to 5,600. We can come all the way down to 4,700, and then continue to move up. My targets are higher on gold and silver, even though I realize the risk to reward has severely diminished now. But yeah, I might be rotating. As I said, we've been rotating some profits from silver into the markets, but also some in bonds and cash. I still have a majority of my gold and silver ready to cash out on the next leg up. Again, no guarantees, no financial advice. Do what's right for you. We're already in profit of hundreds of percent. We've outperformed every single thing you can think of. The stock, even with this crash, everyone will come out now and say, the market's crashed, gold and silver are terrible investments. Silver's still at $100. We bought it at $20 not that long ago. We bought it at $34 late last year, or whatever it was, middle of last year. I think it was late last year. When was it? When did we have that breakout of $34? It was $39. Yeah, May of 2025, and then the breakout of $38 was August of 2025. So late last year, we've still outperformed, even though silver's crashed 20%. We've outperformed the S&P 500. We've outperformed NASDAQ. We've outperformed Coca-Cola. We've outperformed XRP. We've outperformed the crypto market. We've outperformed miners. We've outperformed many assets. We've outperformed every hedge fund, even though the market is still crashed. So it's still an amazing investment. So don't let that put you down, that people are going to start saying you're investing in terrible assets. We're still up against everything. What I'm more concerned about is the crypto market. As we've mentioned for the last 6-7 months, and we expect to win a bear market, and everyone will keep trying to tell you different, but certainly, there was no argument to be made that anything apart from the top 4 cryptocurrencies were in a bear market because they're down 90%. But if you look at the top 4 crypto assets, you can very much say that we have been in a bear market and that we were right again. Why? Well, XRP from the peak to where we are right now has dropped over 50%. Remember when we said it's a matter of when, not if XRP will drop 50%? Well, today has marked the time. We're down 50% on XRP. And here was a trade. Was it in the FOMC cheat sheet or the XRP weekly? I'm not sure, but we had this trade play out exactly as predicted. Literally in 3 days, we've made 11%. That's without any leverage. This was a trade with a nice risk to reward that was released on the newsletter. I think it was the FOMC cheat sheet. I'm pretty sure. Anyway, if you want to get that newsletter and get some access to my thoughts on the market, again, it's not financial advice. You can have a 1 week free. Oh, why is that? That's very weird. I need to sort that link out because that doesn't work. You can have. It's the first link in the description. Let me just check that link and why that's gone wrong. 1 week free. Not sure. Should be fine. Let me try again. No, that's not right. I apologize. I'll just copy and paste it manually. Let me get the link. Someone was asking yesterday, I think it was in Discord, how do I get the newsletter? Well, this is how you get it. You press this link, you get a 1 week free trial. So that trade was executed perfectly. So that 50% correction that we've been calling for has now been confirmed. Can we go down another 50%? Sure. Do I expect to go down another 50% on XRP? Probably not. Not at this point. But yeah, we've hit our next buy zone of 172. I think I'm not going to give away too much of what's going on Discord and Electrum, but I think Martyn might be chipping away at a few things at this moment in time as well. So yeah, we hit our zone at 171 on XRP. That was the next buy level. The next one will be 158. I don't buy every random drop. I buy these levels just because even at these levels, we can suddenly get a 7% correction and I can choose, do I want to keep it in my spot bag or do I want to trade it? But yeah, we bought at 171. That was the next level. That got hit just a few hours ago. I do expect the downtrend to continue, but I'm also aware that there can be short squeezes and we can go up in the short term as well. So the trend is continuing to the downside, and now we're going to move on to Kevin, not Kevin Hassett. He's not going to be the next chair. What was his name? I've already forgotten his new name. Not his new name, the name of the person. We'll come on to it. Kevin Warsh. Kevin Warsh, not Kevin Hassett. Kevin Warsh is the next Fed Chair. I'm going to be telling you more about him in a second. If you have just tuned in, please can you make sure you've hit the like button and you have subscribed. We'll be going through all your charts. We're going to be talking about XRP. We're going to be talking about the new Fed Chair. We're going to be covering Trump making that announcement, and we're going to be talking about the crash that can continue. So the 50% crash on crypto has been completed. If you look at some altcoins, they've always been in a bear market, or they have been in the bear market for the longest time, and that's why we haven't really been touching them unless they've had 50% corrections. I mean, you can look at any of these, even CRO, which had a good pump because of Trump, is down a severe amount as well. Oh my God. Even CRO is down 78%. You look at any of these other ones, look at some smaller cap ones. This is Audius, a smaller cap cryptocurrency. What's that down? This is looking awful. This is down 93%. A lot of people were interested in OMG this cycle. I mean, that's down 99% for 2021. I didn't really have a bounce this cycle. What else? ADA, one of the safer coins out there, one of the ones that are probably going to stick around. That's also down 75%. So you can see everything in the crypto market is down quite substantially. If you look at Dogecoin as well, from the highs of 2024, that's down 77%. So nothing is not really in a bear market. Everything is in a bear market now. Does that mean I'm not buying? Well, I've told you my strategy. I've got all my XRP buy levels on the newsletter. Other currencies that I'm interested in, I don't think they're going to perform well, but every 50% they drop, I will buy some more. Okay, I'm going to come on to your questions, but let's just have a quick look into who is the new Fed Chair. If you are on the newsletter, you can and you sign up now and you want to look at the portfolio challenge, well, what you can do is go to the archive. Shortly, I'll be adding it as a tab at the top, but you can see the first entry of the £5,000 portfolio challenge went out yesterday. So go check it out. You can see all my framework, the reasons why, how I'm buying, why I'm buying, what I'm buying, the research behind it, my framework, all of that has been released. And this weekend, there's going to be an extra one on the portfolio challenge for more buys on Monday at the open. Let's go to today's newsletter. You get this daily newsletter as part of the package. You get the full access to it. The top stories today are Trump picks Warsh for Fed. Former Governor Kevin Warsh is nominated to lead the Fed, signaling potential aggressive rate cuts. You might think that's great. Great for liquidity, but not great for long-term yields. We'll come on to a full story about Kevin Warsh in a second. Precious metals. I mean, did everyone see the drop yesterday? If you have just tuned in, please do make sure you hit the like button and make sure you have subscribed as well. Gold and silver sees a massive drops as investors bet on Warsh's hawkish roots and dollar strength. You might think that's a bit surprising, but the new Fed chair has some very hawkish roots. What does that mean? Well, being hawkish means not wanting money to be printed, not wanting low rates. And Warsh has some hawkish roots. We'll come on to that in a second. Amazon is eyeing a $50 billion AI stake. Amazon negotiates a massive open AI investment tied to adopting custom Trainium chips to rival NVIDIA. We've got a government shutdown looming. A brief partial shutdown is likely after Senator Graham blocked a tentative funding deal over ICE policies. We did think we had a deal for a second, and then we didn't. So we are expecting that government shutdown to start tomorrow. OpenAI targets 2026 IPO. This is something we're excited for. Sam Altman hunts for $100 billion to fund a public listing while racing rival Anthropic for market dominance. We're going to have a couple big IPOs this year, which will be very exciting. And then once again, the deep dive is going to be on Warsh. Nominated triggers regime change. Trump's Fed picks eyes aggressive rate cuts fueled by AI productivity while slashing the $6.5 trillion balance sheet. Can everyone in the chat, if you're watching live, I want to see your initial reactions before we go into the deep dive on it. Are you happy with the Fed Trump pick? I will give you more information in a second, but initially, he is looking to cut rates. He does think rates should be cut because AI productivity is going to go up. He's not worried about wage inflation because he thinks that's part of AI productivity will offset that. So he's looking for big aggressive rate cuts fueled by AI productivity, but he does want to slash the QE, or the balance sheet of the Fed. I want everyone in the chat to go yes or no. Are you happy with the Fed chair? I want the chat to start rolling. Yes or no. Are you happy with the Fed, with Trump's pick? Again, it hasn't happened officially yet, but we are very, very confident that this is going to be former Governor Kevin Warsh. Are you happy? Yes or no? Keep spamming it in the chat. I want to see the chat rolling. Oh, Daniel said yes. I want everyone to let me know yes or no, and then we'll get into the full thoughts. Guy Kemp says no, yes or no. There is also a poll running, but I want to see what everyone's saying right now before we go into the deep dive. Yes, no, yes, no. Yolanda says no. Armand says yes. Peter says yes. Guys, you can keep spamming it as well. This is your one chance you're allowed to spam. We normally block spammers, but you've got given permission. Robert says yes. Cross says could be worse. Alpha says yes. Flower says yes. David Hensley says yes. Love Trump. PB says yes. I think it'll be short-term positive impact, but hyperinflation is a huge risk. Oh, I love that. They're all clowns. Says Crypto Coin Elite. Zach says yes. No Hype says no. I don't care. They're all political. Says Six Boy Custom. It's and Tony says no. Pump says yes. Guys, why is the chat not rolling? You're allowed to spam. You're allowed to spam. Keep spamming yes or no. Zach says yes. Sean June says no. Wait and see. No opinion yet. I'm going to ask you again after we go for the deep dive. So I want to see what we're getting more of, yes or no. I think it's pretty balanced right now, maybe in favor of yes right now. I think he's completely right about the AI, says Pump Free. Megan says yes. Jack Churchill says yes. Vimdo says yes. RoPro says yes. Nvidia up. Oh, someone's an Nvidia investor here. RoPro. Potato Family says no. Crypto Coin Elite says, I don't know what that means. Kev says yes. Megan says yes. Let it burn. I want cheap XRP, says Ethan. Daniel says yes. Robbie says, because nearly 3 years of quantitative tightening and Fed draining liquidity in the record-breaking way, we've been prolonged suppression, but QT just ended and draining has stopped. Thank you, Robbie. But we're talking about the new Fed chair who wants to slash that balance sheet. Don't care. Dean says, who cares? I mean, if you invest in the market, you should cover these stories. Mork says, was hoping for Garlinghouse. That's the comment of the day. Brad Garlinghouse for Fed chair. Justin said yes. PB says, can you talk about the 2-week death course on Bitcoin after this? If we have time, we'll look into it. Zach says, yes, it's Happy Friday. I don't give too much weight to death crosses, golden crosses. I mean, most of the time, you normally get an opposite reaction and then a continuation. We had a death cross 6 months ago, and we covered it, and we've given you all the information on it. If we have time, we'll tell you more about it. Robbie says, because of that, we're going to see crypto beginning to recover. Yes, 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 yes. Okay. I think it's 50-50. What's the poll saying? The poll is more in favor of yes, we're going to pump. No, we're going to crash. Yes, it's Happy Friday. I think it's more in the favor of yes. Hung says no. Yesin says maybe. Alpha says yes. Paul Mentovich says, I don't know. Daniel Jones says, why would Trump pick someone who's not going to reduce rates? It's not all about rates. I mean, there's a lot going on behind the scenes as well. Amber says yes. Sensei for Fed Chair. And remember, he can't just pick someone who's going to, I mean, there's only one vote at the end of the day. Robbie says yes. MB Ghost says, well, I did my poly market bet months ago. Nice 8K swing up. Is that who you voted for, MBG? Anyone is better than Powell, says not financial advice guru. Tidy says, I get your point. Vocal Foster says no. Trump said he passed on appointing Kevin Hassett as Fed chair because he didn't want to let him go from his administration. Thank you, Vocal Foster. So yeah, it's not Kevin Hassett, it's Kevin Warsh. Okay, so if you have just tuned in, we are going to be covering the new Fed chair. We're going to be covering when Trump announces this. But in the meantime, we know who it is. We're ahead of the market. Well, to be fair, the market's also priced it in at this point. But I'll be giving you all my thoughts, and let's go straight into the deep dive straight away. I do want to just quickly bring to your attention the newsletter. We do have a 1-week free trial if you haven't signed up yet. The link is in the live chat. We have just put the first issue of the £5,000 portfolio challenge. So if you join now, I still haven't made a buy. The first buy is going to be on Monday, so you can still get all the newsletters there. You get the daily coverage, the charting course, the budget planner, debt planner, the deep dives written by experts, 0 ads, direct access to me, direct access to the community, and a lot more perks as well. So go and check out the newsletter. Let's go over, and it's always our show notes as well. The one big thing today is President Trump's expected nomination of Kevin Warsh to lead the Federal Reserve signals a radical shift towards aggressive interest rate cuts paired with rapid balance sheet contraction. Whilst Warsh aims to slash rates by 1% based on an AI-driven productivity theory, markets reacted negatively to the liquidity drain inherent in his plan to shrink the Fed's $6.5 trillion portfolio. This strategy threatens to push long-term bond yields higher, even as short-term rates fall. So we do have that as a potential risk. What I'm actually going to do is go straight to deep dive. We don't need a summary because we want to cover the whole thing. We've got a lot of big movers in the market today, a lot of mining companies down, but a good few companies up as well. Go read about why they're up or down. Trump Fed pick, the hawk who learnt to fly. President Trump is expected to nominate former Fed Governor Kevin Warsh as the next Federal Reserve Chair this morning, concluding a chaotic selection process that saw betting markets pivot sharply from BlackRock's Rick Rader. Warsh was served at the Fed from 2006 to 2011, so he has been at the Fed before. But he did have a reputation, and this is the funny part. He had a reputation as a fierce inflation hawk. he famously criticized quantitative easing as a reverse Robin Hood policy that benefits the wealthy. So he was saying printing money and quantitative easing and pushing the markets up, I don't like that. It only serves the rich. So he was famously a hawk in that sense, that he didn't want rate cuts, or he didn't not rate cuts. He didn't want quantitative easing. But that was 2006, 2011. People change, or do they change? I don't know. However, in his recent public support for the president's demands for aggressive rate cuts signals a significant shift in his policy stance. Despite his history, markets reacted with mixed of relief and caution. Stock market futures dipped 0.5% while the dollar gained, suggesting investors view him as a relatively safe pick compared to more radical alternatives. This isn't the most radical cut person that Trump could have picked. In fact, he has a reputation of being a hawk. This nomination isn't about a change in leadership. It's a test of the Fed's structural independence. Remember, that's the most important thing. The market doesn't like uncertainty. The market can deal with someone being hawkish, or can deal with someone being dovish to an extent. Obviously, if they're too hawkish or too dovish, it has an effect on the bond market, which has an effect on the stock market. But what's actually more important is the Fed's independence. I know we all like to say, how independent is the Fed? It's all rigged, this, that, and the other. But what the world market needs to see is independence. What does that mean? Well, the Fed is a separate entity to the government. It's not Democrat or Republican. The Fed is supposed to just go off the data. People there should just look at the data and make their own decision. They can disagree, that's fine, but they can't be seen as having political pressure. As soon as you start seeing things like injunctions from the government, or people coming into the Fed and solely just listening to President Trump, or anything that indicates that the Fed has become political to the outside world, that is when there's uncertainty in the market, and that's what the market doesn't like. Alongside bad policy. I mean, if we just had rate cut, of course, the bond yields will go down, will go up on the long term. The 10-year will go up, mortgages will get more expensive, but the short-term yields will go down. Some people need to get their head around that. Just because you've got rate cuts doesn't mean your mortgage is going to come down. It depends if the market believes in the rate cuts and it's the best thing for the market. Otherwise, the long term, remember, the Fed only controls short-term interest rates. Mortgages and long-term loans, which most of the market cares about, is determined a little bit by short-term rates, but also by policy. If the policy is too risky or not what the market likes, then they demand more for their 10-year bonds, and mortgages go up. So there's two sides to it. Fed's independence will make sure that there's not much uncertainty, and the actual policy needs to not be an awful policy or something that the market doesn't like. Otherwise, rates can still go up even if you're cutting rates. So there's two things to navigate there. Of course, you need to navigate inflation and the jobs market. Can this Fed governor do that? Is he going to be independent? Is he going to control the markets? Well, we're going to dive into that further as we go on. This is just a quick introduction. The path to confirmation is already hitting a wall. Senator Tom Tillis has vowed to block all Fed nominees until the Department of Justice criminal investigation into Jerome Powell is resolved. This probe centers on alleged testimony discrepancies regarding Fed building costs, has created political stalemates that could leave the world's most powerful central bank in a leadership vacuum when Powell's term expires in May. A whole new risk here. We've got a senator that's vowing to block any nominee until the Department of Justice's criminal investigation into Jerome Powell is resolved. That could bring a whole new set of uncertainty the closer we come to May. Because imagine Powell's term is up, but they have blocked the new Fed coming in. Then what we have is potentially a Fed without a Fed chair. And that's a whole host of other issues. Now we've set the scene. What we're going to do is go even deeper into the new Fed chair. We've just got a super chat from Tidy Big Dog. I got it right today. Thank you very much. This is going to be a S show. Could you imagine trying to fix this mess? As the 501 Hilfie Ricardo says, instead of going off the data provided to him, the Senate reached a deal to avoid US government shutdown. Has that happened? Let's have a look at this. US government shutdown. Let me refresh this and let's see if we've got any. I don't know if that has been priced in yet. Trending. Let's go back here. This is the Fed Chair nominee. We've got basically now, what's this gone up to? It's gone up to 100% chance now. I mean, it is going to be Kevin Warsh. If it's not, the market is severely mispriced this. But remember, once upon a time, it was going to be Kevin Hassett with an 84% chance. But we are minutes away from an announcement, which we'll be covering on the show. And that's Kevin Warsh at 100%. I don't know if we're minutes away. It's going to be this morning. I don't know what time yet. So that's Kevin Warsh. I just want to see this government shutdown. Government shutdown. The odds aren't dropping massively right now. So I don't want to go off that data just yet. As soon as we get confirmation, we'll talk about the government shutdown as well. But it's now time to go over to the deep dive. We're going to give you all the information you need to know about the new Fed Chair, and then I'll give you my thoughts, and then we'll go into the charts as well. So that was the hawk that learnt to fly, our new Fed Chair. Well, not mine, the America's new Fed Chair. Gold and silver crater as Trump signals Warsh for the Fed. So the precious metal market just undergone its worst day in over a decade. Spot gold plunged 7% to under 5,000 an ounce, while silver was absolutely devastated, dropping 16% to slip back to the $100 mark. Everyone's going to come out and say this is awful. Why did he invest in gold and silver? But we're back to where we were last week. The catalyst. President Trump signaled he'll nominate Kevin Warsh to replace Jerome Powell as Fed Chair. Warsh is a former Fed governor. He's been in the Federal Reserve before. And Wall Street liaison is a bit of a wild card. He's a historic inflation hawk who has recently made dovish comments supporting rate cuts. The market, however, is betting on his hawkish roots. These hawkish roots are really putting off the market right now because Kevin used to be pretty hawkish when he was in the Fed. As the dollar hits its best day since November and Treasury yields climb, the opportunity cost of holding non-yielding gold became too high for traders to ignore. Remember, gold and silver, there's many reasons they're going up. Silver's going up because of supply constraints, because of the paper market. It's going up because of solar. It's going up because of supply shortages. Gold is going up because of China buying so much gold, the BRICS nations buying so much gold, every single central bank buying gold and pledging to buy more gold in 2026. Retail investors wanting to buy into gold, jewelry purchases going up, geopolitical concerns, a war around the corner. That's why gold's going up. But also, gold goes up when rates come down. When rates are up, no one wants to buy gold if you're just looking at gold by itself, because gold doesn't give you a yield and it only goes up on average maybe 5-6% a year. Obviously, the last couple of years have been completely different because of all the other things I've listed. But gold doesn't normally go up when the Fed is raising rates or when rates are high, because people can earn 5%, 4%, 4.5%, 6% just owning government bonds with yields. When rates come down, people go, actually, we're not getting as many yields. Let's invest in the stock market. Let's invest in gold and silver. They don't have yields, but we're not getting much on our money anyway. So when the market realized that actually he might not be as dovish as we think, as the other candidates once were. Kevin Hassett was much more dovish. He was pledging rate cut. When this got priced in, the market went, actually, he's a bit hawkish. He might be testing the Fed's independence. So gold is actually might not be as compelling. By choosing Warsh over more overtly dovish candidates, the administration is signaling a potential Fed that is more disciplined and less likely to slash rate cuts aggressively. For retail investors, the carnage in mining stocks like Newmont Barrick is a reminder of how much these equities act as leverage bets on underlying metals, which is obviously great if you are a high-risk investor and want to be exposed to those metals. Let's continue to move on and then come into the full deep dive before President Trump makes his official announcement. 400 watching, smash that like button. Yes, if you have just tuned in, one ask, if you've just tuned in, we're about to do the full deep dive on Kevin Warsh, the new Fed chair. Could you please take 1 second to hit that like button? It takes literally 1 second. Please do make sure you have subscribed. I am going to put the link. Oh, that didn't play. I am going to put the link of the newsletter in the live chat. If you don't, you can try it for 1 week free. You can then decide to upgrade, or then within that week, if you don't cancel, you will get upgraded. Or you can have a free plan. If you don't want to even have the week free trial, there is also a free plan. Go check out the newsletter. We have just launched a portfolio challenge. The first buy is happening Monday. If you want to see what that is all about, then go and check it out. That newsletter is coming out this weekend. The first newsletter in the portfolio challenge came out yesterday as well with the full framework. Amazon's $50 billion bet on OpenAI. Amazon is active talks to invest about $50 billion in OpenAI, a move that would make a lead investor in the massive $100 billion funding round. So OpenAI is looking to IPO, and Amazon might be the first to invest a significant chunk into it. This is about the government shutdown, OpenAI and Anthropic, the $1 trillion IPO race. Who's going to win it? Who's going to IPO first? Who's going to get the funding first? And is 2026 going to be crazy with these IPOs? Well, you can read about that story as well. Apple reported earnings, and it was up in the aftermarket as well. If you want to read about that as well, it's all in today's newsletter. Remember, you get this newsletter every trading day, plus you get the XRP weekly on Sundays. Now it's time for the Fed's next chapter. What Kevin Warsh means for your portfolio. Here he is. Forget about Jerome Powell. Jerome Powell is fired, and in comes Kevin Warsh. Is he a hawk? Is he a dove? Is he a dove disguised as a hawk? Is he a hawk disguised as a dove? Well, let's read about him. President Trump is expected to nominate Kevin Warsh as the next Federal Reserve Chair today, replacing Jerome Powell when his term expires in May. For retail investors, this isn't just a personnel change. It's a potential regime shift that could fundamentally alter your investment strategy across stocks, bonds, and crypto. So when that person earlier on came in and said, I don't care, it doesn't matter. Well, it does matter, and it will be having an effect on my investment strategy as well, as it should. If anyone's an active investor, really, you need to understand who's in power, unless you're just a passive investor, which again, buy, hold, buy the dips, hold for longer, and you'll be fine at the end of the day. So who is he? Who is this person? I am literally 100% confident Donald Trump is going to announce Kevin Warsh. So that's why we front run him, and we're doing this article already. So who is he? Well, Warsh is 55. He is a former Fed governor. He's been in the Federal Reserve before as a governor, so he was voting on interest rate cuts or rises or hikes. Who served at the central bank's main liaison to Wall Street during the 2008 crisis. I'll let you think about that. He worked in mergers and acquisitions at Morgan Stanley, advised the White House on economic policy, and currently advises billionaire investor Stanley Druckenmiller. His marriage to Esther Lauder, heiress whose father backs Trump's. Sorry, his marriage to Estee Lauder, heiress whose father backs Trump, raises independence questions, but his deep market experience gives him credibility that other candidates lack. So initially, there is links already to Trump. There is links to independence already, but we can see he's had a long career within he has a long career within the Fed, within investment strategy, within economic policy, advisory roles. So we can't doubt his expertise within the market, but we can start to doubt his independence within the whole situation. So that's who he is. Now, this is what everyone's a bit worried about, his hawkish past. So the hawkish past meets the dovish present. Once upon a time, he was a hawk, and now he's looking to be a dove. Warsh built his reputation opposing the Fed's balance sheet expansion and quantitative easing after 2008. So he doesn't like quantitative easing. To be honest, none of us should really like quantitative easing. It's money printing, it's buying up the stock market. It's great for the rich, not great for people who are trying to buy their house or whatever. But let's just take away morals for a second and talk about what's good for the stock market and crypto, which is quantitative easing. We want money to be printed. Why? Well, because the more money gets printed, the more valuable our assets get, the more reason people might look to gold, silver, Bitcoin, and kick the can down the road until the debt's too big and the whole thing explodes. That's the problem at the end of the day. But he did build he doesn't want quantitative easing. And if the market think he doesn't want quantitative easing today, then the market won't go up. It might even crash. So Warsh built his reputation opposing the Fed's balance sheet expansion and quantitative easing after 2008. That was his reputation. His reputation was a hawk. His reputation was, we don't want quantitative easing. So there we go. He warned that ultra loose policy would cause inflation and distort markets. Now he's calling for aggressive rate cuts to 1 to 2% down from today's 3.5 to 3.75. Again, a major shift. Right now, what we're expecting, if it was under Jerome Powell, and we're going to continue under Jerome Powell, is 1 rate cut this year, 2 rate cuts this year. What Jerome Powell said recently, if we go over to, let me see if I can bring this up. And what Jerome Powell said recently at the FOMC, I'll read you some of the quotes Jerome Powell is saying and how this is different to what, if I go over here, this is our live community in the Substack app. Remember, if you are a premium member, or if you have just taken advantage of the 1 week free trial, I'll leave that link in the live chat, then you can have access to this community. We send out posts and everyone replies. This was something we did yesterday. I want to find our analysis of the FOMC over here. So we just have the FOMC and we got Jerome Powell's thoughts. Jerome Powell, this is a direct quote from the FOMC. Rate cuts are at or very near neutral. So his quote was, interest rates are now within the range of plausible estimates of neutral. Why is this important? Well, it tells you the Fed does not feel policy is restrictive enough to force quick rate cuts. The agreement was to hold. There was broad support today for holding. Inflation risk is fading. A lot of tariff pass-through has now happened. That was a bit of a dovish comment, but he also said the labor market has clearly softened, but there is signs of stabilization. So what Jerome Powell is saying is we are at the neutral rate, or we're very close to the neutral rate. Inflation is under control. The jobs market seems to be coming under control now. The rates seem to be sufficiently restrictive, but they seem to be at the neutral rate. Remember, the neutral rate is where everything's in policy is restrictive enough, so inflation doesn't get out of hand, but the labor market is strong enough that it's not collapsing and we don't go into recession. He thinks we're literally nearly at that rate. Maybe 1 more rate cut, maybe 2 rate cuts, maybe no rate cuts, maybe even if inflation goes up, we'll get rate hikes. So he thinks we're at a good level. He's indicated just a few days ago, 2 days ago with the FOMC, that we're not going to cut rates. We're not going to raise rates. We're very happy where we are. Don't expect a rate cut in March. Probably don't expect one in April either. So he thinks we're at neutral rate. Kevin Warsh is saying He's calling for aggressive rate cuts. He's saying we need to go down another 1 to 2 percentage points. That's about 4 to 8 rate cuts from where we are now. Completely different policies, and the market will be very uncertain on where the rate cuts are going, and uncertainty isn't great for the market. I'm not saying we shouldn't have rate cuts. In fact, if it was up to me, we probably would have a couple more rate cuts, but that's it. I'll be a bit between Jerome Powell and Kevin. But if he continues to call for 1 to 2% rate cuts, which is what he's been calling for, the market would not like that. And let me explain that to you again. Rate cuts are great. Rate cuts inject liquidity. The market loves it. Rates come down. Normally, mortgage rates come down. But if you get rate cuts too quickly, I think I've got an infographic for this to help show this to everyone. If I actually go over to our FOMC cheat sheets, we do cheat sheets for big events as well, so you can follow along. Let me go to the FOMC cheat sheet and see if I can bring you this over here. This will help explain what the problem, because a lot of people, and I can understand why, you think rate cuts are great, and if you keep getting rate cuts, mortgages come down and whatever. But there is something called a bond trap. The bigger risk is credibility. So as Powell nears the end of his term, markets are starting to price future leadership and policy tolerance. If investors believe inflation will be tolerated, they sell long-dated treasuries. The result, short-term rates fall, but long-term yields rise. Mortgages stay high, financial conditions tighten. So if we look at this over here, yes, so here. This is the normal cut. This is sort of what people think Jerome Powell's doing. The normal cut, he cuts a little bit. The market's pretty certain. It's scenario A. You can see it as scenario A. The normal bull cut. Economy is safe. Inflation is dead. People buy bonds. Short-term rates come down, but also long-term dates come around. So he's cutting rates. Short-term rates will come down. Long-term rates will also come down because the economy is safe. The market perception of US debt is safe. And then what happens is the verdict is it's cheaper borrowing for everyone. The market rallies. The risk with just cutting rates is what happens is investors think that the Fed is ignoring inflation. And what will happen then is, because they cut rates, well, short-term rates will come down. They've cut rates, short-term rates come down. But the market doesn't like it. The market doesn't believe it. The long-term rates, the 10-year yield, they demand more for their money because the market's just become a lot more risky for them. So they demand more for their money. The long-term yield on the 10-year bonds will go up. And what will happen is mortgage rates actually rise despite a Fed cut. So just because this new Fed chair is going to come and he's signaling 1 to 2% rate cuts, well, actually, if he does that, there's a very high likelihood that the market will crash because long-term rates go up, mortgage rates go up. People can just put their money in bonds and start earning 5%. What's the need to invest in the stock market when you're outpacing inflation properly with long-term rates? So that's the real risk when we start looking at someone who's very, very dovish and just wants to cut rates 1 to 2%. Again, I'm not against rate cuts. I'm very much for rates to come down. I'm very much for mortgage rates to come down. I very much want the market to go up. But aggressive rate cuts, I just want to make this clear. A lot of people get this wrong. Aggressive rate cuts does not mean the market shoots up. It can mean the market crashes as well. And on that point, if you ever hear the term emergency rate cut, don't think this is great. Think the market's about to crash, because an emergency rate cut's not good either. So Warsh has built a reputation opposing the Fed's balance sheet expansion after quantitative easing. He warned that ultra-loose policy would cause inflation and distort markets, but now he is calling for aggressive rate cuts to 1 to 2%, down from 3 to 5%. So what we're looking for is about a 1.5% move down or 2.5% move down, which is absolutely extraordinary. I don't know what his current thoughts are today. I'm sure he'll make a speech and tell us. His justification, the reason he's happy to cut the rates down is his justification. So what he is saying is, Artificial intelligence, AI, remember, we've made our prediction live here on the channel. AI is going to completely change the world. It's going to be the key driver within the stock market, and you're going to look back and there was a time without AI, a time after AI, and you want to be on the right side of the trade. You don't want to be that person who just thinks AI is just stupid and it's never going to go anywhere. AI is going to change the world. And you don't also want to be the person that keeps calling for an AI bubble, because you'll probably miss out on gains. And what if there is no bubble? Things are very different today. Let me continue. So his justification is AI is driving a productivity revolution that makes inflation fears outdated. Reasonable argument. He's definitely entitled to make that argument, and maybe I'm in agreement in that argument actually. So he says we can cut rates because artificial intelligence is driving productivity revolution that makes inflation fears outdated. He says inflation doesn't matter. The productivity with AI is going to be so large that it's going to outpace inflation. So Warsh argues that a 1 percentage point boost in productivity growth, which we're probably going to get from AI, could double living standards within a generation, allowing the Fed to cut rates without triggering price surges in the bonds. He believes Powell's Fed is stuck in dogmatic thinking that higher wages automatically cause inflation. That is the way things go. Higher wages, for the longest time ever, causes inflation. That's the problem in Japan right now. Again, don't get me started on the carry trade, but one of the big issues in Japan is the wage growth cycle, which is higher wages causing inflation. That is what Kevin is saying is no longer the case. Higher wages don't automatically cause inflation, and that AI could really boost productivity, meaning this doesn't matter. Vocal Foster says PPI in about 10 minutes. PPI in 10 minutes? Let me put that on the screen. Oh God, we're going to miss PPI. Thank you very much, Vocal Foster. Really appreciate you sending a super chat and making us aware of that. This is what's great about the family. We never miss anything, because if we miss it, you guys are on top of it. What a family we have. Thank you, Vocal Foster. What I'm going to quickly do then is put that there and then see if we've got a PPI. I'll just make a new one. Okay, let's do PPI in PPI. I'm just going to put inflation data in. I want to cover that because obviously PPI is probably one of the most important inflation measures. Let's put a timer on the screen. It's not in 0 minutes. Let me change that. It is in 8 minutes. There we go. Okay, that's PPI in 8 minutes. We'll be covering that live. Let me get the economic calendar ready for that. What are we expecting today? So, okay, let's just pivot for a second and then we'll come back to Kevin has it. We're having inflation data coming through. Why is this not playing, by the way? Super chats aren't playing right now. I have no idea why, but we'll read them out. Oh, 1917 A. Buckley sent 5 Martyn Lucas Investors gifts membership. Thank you very much for sending memberships in, 1917 A. Buckley. Can everyone please thank 1970 A. Buckley? And if you interact with the chat, hit the like button, you might win a membership as well. That is incredible. Let me tell you what PPI will say, more inflation. Okay, well, yeah, on the subject that we were just talking about, inflation, well, we're going to get more inflation data now. What you don't want to see is inflation jump up. Otherwise, that will continue the stock market correction we're seeing today. Let's have a few things open here. In fact, I'm going to make a adjustment here. We're getting ready for PPI now because PPI is going to be released in 6 minutes. And then we'll come back to the full analysis on the new Fed chair. So what am I going to do? I'm going to see if we can open this up a bit more. Am I back? I'm back. Not sure what happened there. Let's go side by side. We're going to have XRP on one side. We'll go on to the 5-minute time frame. Guys, if you have just won an Electrum membership, if you have just won a bronze membership, you can now upgrade to Electrum. You're essentially getting what is it, 20, Martyn's put in the chat, you're essentially getting a 27% discount to upgrade to Electrum. Electrum is where you get all Martyn's trade, all the perks of bronze, silver. So go and try an Electrum for an upgrade to Electrum. If you go to homepage and then upgrade your membership to Electrum. That's XRP on this side. We'll put Bitcoin on that side. Let's put the S&P 500 actually. XRP on the left, the S&P 500 on the right. That will be good for when that releases. Now we're going to quickly go over to the market. Yeah, the market's down right now. I mean, look at this Bitcoin trade as well. Good. This is 2 trades we put into the FOMC cheat sheet. XRP hit its target. Congratulations. Bitcoin is very close to its target now. I mean, it's sometimes just worth taking the profit. But yeah, Bitcoin is also well on its way on that trade to come out. That was the FOMC cheat sheet where we gave out our trades and our thoughts. If you want to get the newsletter and get all those trades and thoughts and all my daily newsletters, the portfolio challenge, there is a 1-week free trial. Go and check it out. The link is in the description. Okay, so Bitcoin's down, XRP's down, the S&P 500's down. It's recovering a little bit. Gold and silver are down pretty massively. There is going to be a new Fed chair today. We're doing that analysis, but in 4 minutes' time, we're getting even more data that's going to make the market even more volatile. So what is that data? That data is called PPI. It is Producer Price Index. It is one of the 3 major ways of measuring inflation. We've got CPI, which is the Consumer Price Index, what the consumers are feeling inflation-wise and how it's affecting their core basket of goods. Then we've got PCE, which is the Fed's most preferred metric for inflation. And then we've got PPI, which gives us sort of a future view into inflation. This is what the producers are feeling, the companies are feeling. And the reason why this is important is because most of the time, they'll pass that inflation through to CPI. So this is an upwards way of looking at the top down. So this is Producer Price Index, this goes into CPI, then that goes into PCE. So this is sort of looking into the future. What's inflation going to be like in the next few months? Well, we're going to get that data in 4 minutes' time. So if you have just tuned in, if you can please hit that like button, please do hit the like. Someone said, I missed Jerome already. We're going to miss Jerome's little face and coming on and saying good afternoon. We've been listening to Jerome for, I don't know, 5 years now. We're going to miss Jerome Powell. Well, some people are going to hate me saying that. Anyway, PPI is coming out in 4 minutes, and that's Producer Price Index. That's inflation. So what are those numbers we're looking at? Well, we are looking at, oh God, I've just zoomed out too much. Month on month. This is December's information. Remember, we don't get January because January's not finished yet. We're always 1 month behind. But PPI is sort of looking in the future. So right now, December month on month, this PPI, December year-on-year PPI, PPI excluding food and energy, which food and energy is pretty volatile, month-on-month and year-on-year. These are the 4 things we're looking at. Let me see if I can actually tidy this up a bit by just getting rid of all the other countries. Filter, let's clear all. Let's just go to the US and let's apply that filter. There we go. So those are the 4 bits of information coming out, and now I will tell you what it means for the market. So the first one is 0.2. That's for just normal PPI month on month, 2.7 year on year, then excluding food and energy month on month, 0.2. And the most important one is down here. It's year. Oh, let's listen in. We've got a special guest on the show.
At Paul Minter Richmond tipped $1.99 through Super Chat. 500 watching, smash that like, thumbs up emoji.
Thank you, Paul Man to Rich Man. Very kind of you to say that. Yeah, if you have just tuned in, please hit that like button. The most important number we're getting today will be PPI excluding food and energy year on year, because that excludes the volatile stuff and it's a year-on-year number. All of them are going to be important, but that's the first thing the market's going to look at. So the consensus is what you see over here, 0.2, 2.7, 0.2, and then 2.9, the big number. What we want to see for the Fed to be interested in cutting rates or the market to go up is all of these consensus number lower than expected. The lower inflation is, the less the Fed has to worry about keeping numbers where they are. and the more likely we are to see rate cuts. That applies to Jerome Powell. That applies to Walsh. Walsh is also not going to be cutting rates if he thinks inflation is going up. So that applies to everyone. And remember, it's not just Walsh. He has a whole committee and they all have to agree. So if you want rate cuts, which we all do because we want mortgage rates to come down, we want the market to go up. What do we want to see? Well, we want to see consensus or way below estimates. If it's higher, the market can crash because it's already down today. So what I'm going to do is going to go straight over to Bloomberg. I'm going to tell everyone to do this if you're watching live, not on Bloomberg, but on the show you're watching. There is a live button. Firstly, click that, make sure it's red. Secondly, go over to the cogs, click the cods and play playback speed at 2x or 4x if you've got YouTube Premium. That way you are live, up to date with me. I've made Bloomberg live, up to date, so we are very much live with Bloomberg. And now we're going to go over to breaking news from PPI. Here we go. Okay, we are seconds away from getting PPI information now. We will go over to Bloomberg. Let's see if that's up and running over there. No, not there. Let's see. Okay, any second now, PPI consensus is 0.22.7. Oh, it's too high. It's too high. It's too high. The market is down on that, I imagine. Yeah, the S&P 500 just dropped. Let's go straight over to Bloomberg, which should be covering this any second now. What's going on with Bloomberg?
On 30s, up by 2. Some economic data about across. Let's cross over to Mike McKee for more. Good morning, Mike.
Good morning, John. Well, the producer price index for December, a little late, but coming out now, up 0.5% for the final demand numbers. That's significantly more than the 0.2 that was expected on a year-over-year basis, keeps the PPI headline number at 3%. Food and energy, the core is up 0.7 for the month. That is much more than the 2% that was expected, and the flat 0.0 reading last month. And then take out trade services, and you have a 3.5% increase on a year-over-year basis, which is stronger, which is the same as it was in the last month. Now, these numbers are important because these are the last ingredients to go into the calculations for the PCE. And Jay Powell said on Wednesday that the Fed had figured out that core PCE was going to be 3 to 3.1% because of what they'd gotten in the CPI. This may even push that a little bit higher. 0.7% advance in the index for services is what pushed up prices for the headline number this time. And that's kind of the opposite of the story that Powell was telling us on Wednesday, that it was goods that were driving inflation and services were dropping. The core is it was up basically because we got not just services, but we also saw some demand for other services go higher than anticipated. So anyway, I suppose now the question is, what does Kevin Warsh think of all this? And I know you've got Senator Tillis there, and you could ask him what the price of snow shovels in North Carolina is going to be this weekend.
I imagine the price of those has gone up, Mike, without a doubt. Mike McKee, thank you, sir. The senator standing by. Let's get to him right now. Senator Tom Tillis from North Carolina joins us more for more. Senator, welcome to the program. So you had been vowing to block any nomination to the Federal Reserve until the DOJ wraps up its...
Guys, this is massive. They've got a big guest on the show. This is what we're talking about. This is the person who says we're not going to allow anyone to come in until the Department of Justice drops its investigation of Jerome Powell. So this is how there could be a lot more uncertainty in the market, and this is how the new Fed chair might not be able to get elected, all because of this senator, and she's live on Bloomberg.
Investigation. We have some news this morning. As you know, Kevin Warsh has been nominated by the President of the United States to succeed Chairman Powell. Does it change anything for you, sir?
No, it doesn't. I am pleased with the nominee. I think that by most accounts he's well regarded, but we still have to clear the current matter. Look, they're pursuing on the basis of criminal intent testimony in a banking committee hearing that clearly had no criminal intent. So to me, you got some assistant U.S. attorney with a dream in the D.C. District that should really determine whether or not this frivolous prosecution is worth holding up a Fed board seat.
Senator, we have some time between now and May for that investigation to go away and for the confirmation process to open up. Have you given thought to what would happen if we don't have that time? We get to May, this is still lingering, and the chairman steps away. What happens to the top of the Federal Reserve?
Well, I think that we all need to understand we still have a working quorum of members. Whether or not they have an acting chair is a decision that the president and I assume the Treasury Secretary and others can look at. But that's not my problem. We're here because of them. We're not here because of me. And so I think they should work expeditiously if they really do. I'm not an attorney. I watch a lot of crime shows, but it doesn't look like there was any criminal intent here. They have to determine whether or not it's worth grinding this out. Like I said, I didn't put us here. Some assistant U.S. attorney in D.C. district decided to put us here, and they've got to determine if they have a case that's worth pursuing.
Senator Tillis, has anyone from the administration or the Department of Justice reached out to you about the process of how this could go down, or giving you confidence that this will be dropped in time for the confirmation hearing to go forward?
Well, Lisa, I never talk about my conversations with any members. People always ask me what goes on at lunch. I just don't have those conversations, but my public statements stand for themselves.
Is closing the investigation enough, Senator, or do you need other assurances that you think this administration is going to respect the Fed independence?
Well, right now, I think you do that by making a judgment. Look, we've got two cases here, right? We've got the Cook case and we have the Powell case. Both of those, to me, are instances of trying to undermine the credibility of the Fed independence, and I'm staying focused on that one goal. I'm not really persuaded or even willing to entertain any discussions that take me off that goal.
Okay, but you just mentioned the Lisa Cook case. Do you also need to see that wrapped up either by the Supreme Court in order to move forward?
Yeah, I do. I mean, because look, I mean, we're talking about what looks like.
Guys, I'm going to pause that. I never normally pause a live show, but this is very important. This is Senator Tom Tillis. He's the one that's blocking any new Fed chair until the Department of Justice drops its case. And he's just made a major announcement. Not only do they need to drop the case against Fed Jerome Powell, or not just drop it, but finish it. He doesn't know if there's criminal intent or not. He doesn't think there is, but he just wants it to be finished so that the Fed independence is not blocked. And he also just said the other investigation into the other Fed chair needs to also be dropped. Guys, this is breaking news directly from Senator Tom Tillis on Bloomberg. We are covering it live. Stay with us. I'll give you the full PPI analysis plus the new Fed chair, which has now been officially confirmed by President Trump.
Like a paperwork error, or if there was a mistake long before she was confirmed for the board, it's like, my goodness, guys. I mean, I don't know. Maybe Pulte or somebody thought that was cute. I didn't.
So just to be clear, it is not just the DOJ investigation to the Fed that you need wrapped up. You also need the Supreme Court case wrapped up. So that's two issues right now and blocks for you to move forward with Kevin Warsh.
Yeah, well, no, let me bifurcate these. One is moving forward with another, the case that will prevent me considering any board nominee is the Powell case. But I will not move forward for the Fed chair, which we know expires in February. The other case, we have, the Martyn term is about to expire because he was filling basically 6 weeks, or I'm sorry, 6 months. We've got the Cook seat. Those are ones that are really going to be, I'll take a look at the candidate. I'll take a look at how it would affect the board. Look, this is all, in my opinion, this is all about sending a signal to the markets and to the business community that Fed independence is critically important. And going after the chair, I think, took a stool out of the foundation of people's confidence, or a leg out of the stool. In the case of Cook, I do believe that it's another example of a trend, and the Senate has to stand in the breach. We have to make sure that the Fed maintains its independence, and we cannot reward any bad behavior that seems like it's surely motivated not by the substance of the allegations, but by the interest in trying to undermine the Fed independence.
Senator, what's your understanding as to whether the Federal Reserve is cooperating with that investigation? Some conflicting reports over the past few days. What's your read on the situation?
I'm not really sure, Jonathan. I'm going to leave that. That's a better question to ask the administration or the DOJ.
Well, if we get the opportunity to speak to them, I'm sure we'll ask. I've got the opportunity to ask you about the man and not just the process. You said this morning, and you've said it again, that Kevin Warsh is a qualified nominee with a deep understanding of monetary policy. For those familiar with Kevin Warsh and his time at the Federal Reserve back in the financial crisis, they have considered him to be on the more hawkish side of the spectrum on the FOMC. And there is some debate this morning, Senator, about what Kevin Warsh actually stands for, given that we know the president wants lower interest rates. What's your understanding of what he stands for?
Well, with Chair Powell, I haven't agreed with all of his opinions. I'm not an economist or his positions, and sometimes I may be more hawkish than Chair Powell. So coming in, I think Walsh is a good independent. He's got an extraordinary reputation in a community of economists and people focused on the Fed. I don't think that he would want to destroy his reputation by being independent. You could have hawkish members like Waller and others, and I'm fine with them on the board to stretch the thinking. But I don't believe he comes in as more or less going to do the bidding of the administration, which is critically important. And incidentally, I should say it's critically important for the health and hygiene of the administration.
Senator Tillis, does this give you any more confidence that actually the independence of the Federal Reserve will not be undermined, that this actually is going to be a proper process once some of the roadblocks that you're talking about are going to be cleared?
Yeah, I think so, Lisa. And look, this is actually democracy and institutional separation at its finest. We have a disagreement, and we have a mechanism in place for resolving this and moving on. I hope that no one in the administration takes personal offense to this. I'm doing my job.
Senator, do you have any understanding of the timeline?
Well, the investigations can go on forever. I mean, you could see one scenario where Chair Powell has 2 years left on his term, even after he comes off the board. So, I mean, you could see this going on for 2 years, or in my case, 339 days.
Because 339 days, that's when you're going to be retiring. And I know Lisa asked you if you had any conversations. I want to ask you about those conversations, but have you seen any indications from anyone that they do want to wrap up the DOJ investigation as soon as possible?
Well, I think, Anne-Marie, I think that the fact that they're putting forward this nominee, knowing that it would be impossible to get him through with the current position that I've taken, it suggests to me that maybe they are trying to find a way to deal with this. It could be adjudicated expeditiously, or it could be just determining that they also agree that there was no criminal intent in the chair's testimony in the banking committee that I participated in.
Senator, just quickly, have you spoken to the White House? Have they reached out?
Like I said, I have ongoing discussions. So the president and I probably communicate once or twice a week, at least through text. So I have ongoing discussions. I'm not going to talk about the content of them, Jonathan. Kind of like Groundhog Day. I'm going to answer the same question every day the same way.
It's a good movie, I heard.
Senator, we appreciate your time. Thanks for jumping on the call. Thank you, sir.
Right. Guys,
Thank you very much.
Analysis.
Senator Tom Tillis there, on his way to the gym. The senator made me watch Groundhog Day in the last week.
But we heard about that just
I know. That's what that joke is about.
Elaborate on that.
I'm aware. Let's talk about the content of the conversation if we can.
Of course, and his content of his workout, which is actually really impressive.
It sounds like it's going to take a while to get this done.
Yeah.
Unless this investigation goes away.
But if the investigation goes away, it sounds like there is a vote on the part of Tom Tillis for Fed Chair Kevin Warsh. And I think that that's interesting because he really supported the integrity of this person and said that he does think that he gives a sense of independence to this Federal Reserve.
Right. It's not about Kevin Warsh. It's about the process. That last comment there about him and Trump communicating at least once a week, ongoing talks, I think potentially there could be an off-ramp and this DOJ investigation goes away and this could become a lot clearer. Potentially. But at the same time, Senator Tillis is making it very clear he will not move until it does go away. So that's 339 days.
Sure.
Or it goes away.
Based on what we all heard there, a matter of when and not if. And I think that's important. And it means that, yes, things could get messy and we can park that because we've got no idea how that plays out. and we could focus on Kevin Warsh, the man himself, and what he stands for. Because this morning, I think the big takeaway from everybody on Wall Street is there is no real consensus on what Kevin Warsh stands for and how he will vote once he gets on this committee.
That alone is giving a support, though, to the dollar. And I think that that's really notable, that it couldn't have been, it wasn't necessarily some of the picks that would be thought to be simply doing President Trump's bidding. It's this idea that we heard from Senator Tillis that on the margins, this actually does imbue a bit more sense of independence to this Federal Reserve. And I think that that's what the market is picking up. I wonder how far this dollar trade's going to go.
And the Lisa Cook chair. That seat, he's not moving forward until the Supreme Court has a ruling on that. So actually, it's a lot of musical chairs right now when it comes to Federal Reserve.
A lot of moving parts, that's for sure. Equities so far negative by 0.5% on the S&P 500. Lots of news elsewhere. Let's get you an update on that and more with your Bloomberg Brief. Here's Yahara. Hey, Yahara.
Exactly, John. Recapping the inflation data we got moments ago, overshadowed by that Warsh news. But producer prices coming in hotter than expected in December, rising 3% year over year compared to estimates of 2.8%. Month over month data was also hotter than expected, rising 0.5% after a 0.2 gain the prior month. Meanwhile, our top story, President Donald Trump nominating former Fed Governor Kevin Warsh to replace Jay Powell as chair of the central bank. In a post on Truth Social, the president's writing, "I have known Kevin for a long time and have no doubt he will go down as one of the great Fed chairmen." And President Trump saying he successfully appealed to Russia's Vladimir Putin to halt strikes on Kyiv and other Ukrainian cities for a week. The move comes as Ukraine faces severe cold and power shortages due to damaged infrastructure from recent Russian attacks. That's your Bloomberg Brief. John.
Yahara, thank you. Appreciate the update. Up next on the program, Lindsay Piegza of...
Wow. So much to unpack there. Thank you for staying with me for all of that. We thought it was just going to be PPI, but no, it wasn't. We just had Senator Tom Tillis on Bloomberg saying he is not going to allow anyone to become the Fed chair until the Department of Justice drops the charges or finishes the investigation into Jerome Powell and Lisa Cook. So that was breaking news straight after PPI. So let's unpack that one by one. If you are here with me, take 1 second to hit the like button. We are doing special coverage on the market crash, on PPI, on Senator Tom Tillis, and the main story here today is news on Donald Trump's Fed chair pick. We're going to be unpacking who that is. So if you're with us right now live, please hit that like button. Please do subscribe. Let's go through that one by one. So first of all, PPI data came in and the market is down slightly on that news. It hasn't crashed. I imagine it will continue to trend down on the bad inflation print that we weren't hoping to get. So what we got was US PPI month on month, US PPI year on year, US PPI excluding food and energy month on month, US PPI excluding food and energy year on year. The consensus for each of that was 0.2, 2.7, 0.2, 2.9. What we got was way above consensus, not a massive away from a consensus, but deviated from consensus enough that it is a concern that the market wasn't priced in for. So the consensus was 0.2, we got 0.5, 0.3% higher than expected. Same with the year on year, 2.7, we got 3%. Now, this is when it gets a bit more worrying. This is excluding food and energy, excluding the parts which are a bit more volatile. What we got was 0.2%, and this is the more important number, excluding food and energy. That was consensus. We got 0.7%. That's 0.5% higher than consensus. Quite a large deviation. And then if you look at the year-on-year number, not as large of a deviation, but still pretty large, 0.4% difference. We were expecting 2.9, we got 3.3%. So what does this mean? What is PPI? Well, PPI is inflation measure, one of the big three inflation measures we get: PPI, CPI, and PCE. The Fed prefers PCE. The market looks at CPI the most. PPI is that one which tells us what's going on higher up in the chain with the producers, with the companies. This normally gets passed through into CPI. And we are now expecting CPI to come in higher over the next few months or in a couple months' time. And if it's not going to be higher, it could potentially be stickier. This supports what Jerome Powell says. Remember, Jerome Powell is saying And we've got the quotes. We released this to our, as soon as the FOMC speech was done, minutes after, we released it to our premium members on the newsletter. Stay with me. I've got a special deal for the newsletter for you if you're watching live. Jerome Powell has said, let me go over to those quotes that we put out on the community page on the remember, it's not just a newsletter, we've got the whole community page. Straight after the speech, I came out and said Jerome Powell's speech was slightly hawkish hold. They held interest rates, but it was slightly hawkish. What do I mean by that? Well, he came out and said interest rates are now within the range of plausible estimates of neutral. He said they do not need to cut. They're going to hold rates. He gave the idea to the markets that we're not going to get rate cuts next meeting. We're not going to get them in March. We're not going to get them in April. And the Fed Watch tool is now pricing in, if we give it a refresh and see when it's pricing in rate cuts, this will load in a second. Let's go over to June. It's pricing in rate cuts, not in March. It's not pricing it in April. It's now pricing in June. That means no rate cuts for the next 2 meetings. What is now supporting that decision? Well, the PPI inflation we just got now. If the Fed sees inflation rising or being sticky and the unemployment rate not being concerning, they are going to keep rates exactly where they are. They said they're very close to neutral rates. They said they don't need to cut rates. And today's inflation backs that story. So don't expect rate cuts. Expect maybe more sticky inflation than once was imagined. And when this new chair comes in, which we're covering here, he's calling for aggressive rate cuts, but in my opinion, we're not going to get aggressive rate cuts because there's more members on the Fed than just him. And even if he calls for rate cuts, there's still other members, and he's only got 1 vote at the end of the day. So we're probably not going to get those rate cuts that the market might have been hoping for with this new Fed chair. So let me recap. PPI higher than expected. Jerome Powell's not going to cut rates. He wasn't expected to cut rates. This supports the argument of no rate cuts. It actually supports the argument of maybe inflation is making a resurgence. Maybe tariffs are coming back into play, and maybe we will head into a recession based off inflation becoming stickier and actually going up. And maybe we will get rate hikes instead of cuts this year under Jerome Powell as his final decision later towards May. Maybe that will happen. That is an argument for that starting to build. So then we had Senator Tom Tills come on the show. I can't believe this. Oh, Sean, welcome to Electrum. Thank you for tuning in.
7,273 has become a member.
Thank you, Sean, for tuning in. And becoming an Electrum member, you get all of Martyn's trade plus all the benefits of silver and bronze and all the YouTube perks. We then had Senator Tom Tills come on, and he overshadowed the inflation news because he came out and said we might not even allow Kevin to come in as Fed chair because until the Department of Justice sorts out the issue with Jerome Powell, we're not going to allow that, and that's going to cause a lot of instability in the market. Let's go back. Now we've got confirmation that it is Kevin Warsh. We were confident on it. We just got President Trump tweeting or Truth Social posting that it is him. Let me unpack who Kevin Warsh is. Let's talk about the correction in the market. But I am going to run for the next 2 people we've got a limit of 2 people for this, so you have to be quick. Lots of people messaging me, they missed the last discount. As I said, we're not doing that same discount, but what we are running today is a 25% offer for the next 2 people. So if you want the newsletter, if you want all these cheat sheets, we did one for the FOMC earlier, we're going to do them for events going forward. If you want access to the £5,000 portfolio challenge, my full portfolio, my full strategy, what the mission is, what my framework is, and what my buys are on Monday morning, then you can grab the newsletter. You also get one-on-one access with me. You get the budget planner, debt planner. You get the XRP weekly newsletter. You get all my technical levels on XRP and other stocks. We did 2 very successful trades in the last 2 days. Bitcoin down, XRP down as well. You get the chart analysis course. You get the full newsletter every day. The next 2 people can get 25% off. And how do you get it? Well, it's with this link only. So get ready. 3, 2, let me get the link for you. It's only valid with the link I'm about to give you. It's sensei.news/Kevin Kevin. So there you go. Kevin is the new Fed chair, just been announced. The next two people get 25% off the plans. Remember, you can sign up for a free plan as well if you like. So there it is in the live chat. If you missed out on the previous deal, well, here's another one for you. 25% off the newsletter for the next two people. Only two. There it is. So let's go back into our full analysis of Kevin Warsh, the new Fed chair. Then we'll be going over to Martyn in about 20 minutes' time, who will be covering the opening bell. And then I'll be going over to your questions as well. If you have just tuned in, take a second to hit that like button. So who is Kevin? What we were discussing there is the market doesn't actually know who Kevin really is. We know who Kevin is, how old he is, what he's done in the past, but we don't know who he's going to be in the Fed, because he had a very hawkish past, standing against quantitative easing. So the hawkish past meets the dovish present. Warsh built his reputation opposing the Fed balance sheet expansion and quantitative easing after 2008. He warned that ultra loose policy, which is obviously what pushes the market up. Remember, it's not great for the dollar, it's not great for inflation, but it's great for stocks, assets, crypto, gold, and and Bitcoin. But he warned that ultra loose policy would cause inflation and distort markets. But now we think he's dovish, because he's calling for aggressive rate cuts, down 1 to 2%, down from today's 3.5 to 3.75%. We've expressed our concerns about that. I've talked to you about how mortgage rates can go up if you aggressively cut rates. And we've also talked about how he probably can't even get that down because he's only one vote at the end of the day. Why he's saying this, which I kind of agree with, is the whole idea of AI. I've said many times, AI is going to change the world. AI, there's going to be a time without it, a time after it, and it's going to change everything in your life. Whether you like it or not, you have to get with it and understand that it's a major driver in the market. It's like the railroads back in the 1800s. So his justification is that AI, artificial intelligence, is driving a productivity revolution that makes inflation fears outdated. It's a thing of the past. He's saying that a 1 percentage point boost in productivity that we'll get from AI will double living standards within a generation. And that will allow the Fed to cut rates without triggering price surges. So he believes that Powell's Fed is stuck in a dogmatic thinking that higher wages automatically cause inflation. He thinks we're entering a new age. Maybe he's right. I'd probably agree with him. Maybe I don't agree with the amount of rate cuts he wants, because I think that will cause more problems in the market. At the end of the day, what's most important for the markets is not really policy. Of course, policy matters, but I think no one wants the market to crash. So they're going to probably tone back the 1 to 2% inflation rate cuts. But the most important thing in the market is certainty. Right now, there isn't much certainty in the market. We don't know who, if the Fed chair is going to be allowed to be appointed. We don't know his independence. We don't know what President Trump's saying behind the scenes. We've seen the family connections to President Trump and Kevin Warsh, which is scaring the market. We've seen what the senator just said on Bloomberg. That's an obvious concern. We're concerned about inflation. If there's all of this uncertainty, the market's very hard to go up. But once the certainty returns, that's the most important thing, rather than who's the next Fed chair and what's going to happen. The market wants certainty, whether that's bad or good. If there's certainty, the market can adjust appropriately. Let's go over to the next point, the regime change agenda. Let me just check. Oh, there's still 2 available. Let me refresh that. There's 1 gone. 1 is now available. There's 1 available now. I'm going to give you the link. There is only 1 space left for today. It's a 25% discount off the annual plan. Oh, I think off all plans, actually. 25% off today, only for the 2 people that will sign up, that might sign up. 1 is gone, 1 left. Full access to newsletter, full premium newsletter every day, portfolio challenge, trading course, budget planner, debt planner app, first access to the portfolio tracking app coming later this year as well, plus one-on-one access with me and the community. The regime change agenda. Warsh, who has now been confirmed to be the next Fed pick. We've seen that Truth Social post from President Trump, so that is the confirmation now, isn't proposing tweaks. He wants institutional overhaul. His plan includes slashing the Fed's 6.5 trillion balance sheet, which he says has subsided Wall Street at Main Street's expense. He wants to eliminate what he calls mission creep into climate policy and diversity incentives, refocusing the Fed on its core mandate. Sounds like he wants a dramatic shift. So this matters because balance sheet reduction typically pushes long-term bond yields higher. This matters because balance sheet reduction, so he wants to essentially end QE. He doesn't want QE. He doesn't want the Fed buying up stocks or whatever. He thinks that it's QE only benefits Wall Street and not the individual investor, which is probably right. But again, QE helps the market a lot and the crypto and the stock. So this matters because balance sheet reduction, which is what he wants to do, typically pushes short-term bond yields higher, creating a curve steepening effect. So you actually end up getting more on bonds for the short-term yield. While short-term rates might fall, your mortgage rate and corporate borrowing costs could rise. So again, people don't really know what Warsh is all about. We haven't heard too much from him in recent times, apart from rate cuts and potential balance sheet reduction. The market doesn't understand Walsh. He used to be hawkish. Now he looks like he's dovish, but with hawkish tone. We don't know. Let's continue to analyze. Stock market fell as soon as we got confirmation it was him. Not just confirmation, but a clear indication from President Trump yesterday that he was the next pick. Why? Well, the stock market fell despite rate cut promises. So you would think, again, rate cuts, the market will go up. Actually, the stock market and the gold market fell. Here's the paradox. Warsh promises the rate cuts Trump wants, yet stocks drop 0.5 to 1% on the news. The sell-off reflects three concerns that outweigh the rate cut appeal. So I'm going to tell you why now the market is down despite having the perfect pick from Trump. Let me just have a look at a few of your comments before we move on to that. But when there's blood on the street, will Warsh have access to Powell's money printing machine? Sensei, do you write all of this beforehand? Yes. Yeah, this was before. I had a very good indication that he was going to be picked. So yeah. I don't write it during the show. I write it in the morning / the night before. Some of the news stories that will still apply to the next morning, I normally write the night before. If there's more breaking stories during the day, then I will replace them. So I write about 2 of the news stories the night before. And then in the morning, as soon as I wake up, I start writing the deep dive, the other stories, and the other parts of the newsletter. And then obviously between doing the daily newsletter, we do the research reports, we do the portfolio challenge, we work on the training course, we work on the cheat sheets. So yes, this is all written beforehand. Copy that. I'm trying to bake a pie that's never going to taste LB. Lowering interest rates and QT. It will work because AI. Warsh in that self fantasy world. Oh, we've got a Warsh hater in the chat. The 501 Hiffy. We're going to try again. We're going to do this again. Yes or no's in the chat. Let me just check if it's sold out on the newsletter. No, there is still one space. 25% off. I'm going to give you the link. It's /Kevin. It's the discount code. 25% off. I like your style, says RoPro. Thank you very much. So with all the new information about Warsh that we've covered, we're going to give you a bit more information in a second why stocks fell despite rate cut promises and my thoughts on the market and a few more charts. I'm going to ask the chat again, and I want everyone to spam yes or no. Are you happy with Kevin Warsh leading the Fed? Yes or no? I want yeses or no's in the chat. What do I think? I'm going to miss Jerome Powell. I kind of like Jerome Powell. I'm going to get a lot of hate for that. I kind of liked Jerome Powell. He was a little bit cute, wasn't he? Can we get yeses or no's for Kevin Warsh? Are you happy with Kevin Warsh leading the Fed? Yes or no? I'll give you my thoughts at the end of the report. Yes or no? Are you happy with Kevin Warsh leading the Fed? Let's keep it rolling. Let's get everyone commenting yes or no. I just want to get a sense of yes or no. Yes. Okay. 1 no, 3 yeses, 2 no's. 4 yeses. So it's a 2-1 right now on the yes to no's. Yes or no? Are you happy with Kevin Warsh leading the Fed? That has now been confirmed by Donald Trump. Yes, yes. Oh, so 1917A Buckley said, oh, I don't know. You're still asking questions. Javi XRP, no. Hendrik says no. Yolanda says no. Someone says neutral. Alex says not sure. I would have expected everyone would have been happy with this because I know we've got a large, I would say the most of the people that watch this channel. Although, again, compared to a lot of other stock market channels, we're actually pretty 50-50. But most, I would still say, are Trump supporters. So I would have said that if you're a Trump supporter, you would have probably been happy with this nomination. So it's good to see that we have a big mix because then we're one whole big family and we don't we can still disagree on things and still be a family, which is great. And there's not enough of that in the world right now. It's you very much have to be on one side or another. And if you're on opposite sides, then it's just a war. I don't like that. I like people having different sort of opinions and also getting on with each other. And it seems like I think we're getting a little bit more yeses than nos, though. Not sure. I think it's 50-50, though, right now, if we're looking at this. Let's have a look at our poll. 43% said yes, 28% said no. So still very close there as well. No, not bothered. Me too, Sensei, but he had to get... I don't know what you meant by that, tiny big dog. Okay, interesting. I like it. I like it when we're... when there's yeses and nos, not just everyone agreeing with something. I like it. Why stock fell despite rate cut promises? What are Casey's? JP is not at all cute, says Casey. I think he's very cute when he comes out and he's so small compared to like where he speaks. And remember that picture of him with Donald Trump? I wonder if I can find that clip. It's probably one of my favorite clips of Jerome Powell. I think I put it in a newsletter once. Where was it? What newsletter did I put it in? Let me see if I can find that clip of Jerome Powell with Donald Trump because it's one of my favorite clips and I love watching it. Where is it? Trump. When they both had their hard hats on and then Donald Trump said something and Jerome Powell looked at him. Where was it? Powell. Oh god, I'm gonna have to find it for the next show. That's one of my all-time favorite clips of Jerome Powell. Oh, I think it's it. Okay, I think I found it. Let me see if I can bring it on the show. Slight deviation, but it's always good
New
to have
at 3
some fun.
o'clock, an ARC Federal Reserve.
Are no from anybody at the Fed.
Yeah, it just or a lot.
This is it. This is a bad quality clip, but let me play it for you.
Looks like it's about 3.1 billion. It went up a little bit, or a lot. It looks like it's about 3.1 billion. It went up a little bit, or a lot. So the 2.7 is now 3.1.
I'm not aware of that.
Yeah, it just came out.
Yeah, I know.
This is the clip. Let me play it again. It's when Donald Trump says the number and Jerome Powell just looks at him like, "What are you talking about?"
It's about 3.1 billion. It went up a little bit, or a lot. So the 2.7 is now 3.1.
I'm not aware of that.
Yeah, it just came out.
Yeah, I know. I haven't heard that from anybody at the Fed.
Yeah, it just came out.
Our notes had it about 3.1 as well.
3.1,
3.2.
This came from us?
Yes.
He is cute. Look, he got his little glasses out and he put them on, and
I don't know who does that.
You're including the Martyn renovation. You just added
our entire capital.
Yeah, you just added in a third building is what that is. That's a third building.
Well, no,
the
but
Martyn building.
it's a building that's being built.
No, it was built 5 years ago.
Okay, well, the president who...
Sorry, I just had to bring that clip up. It's one of my favorite clips of Jerome Powell. Anyway, let's get back to news. We are keeping an eye. I saw someone say, are we going to bring any feeds from Trump? If he does speak, we are keeping our eye on all feeds. So yeah, Trump might make a live announcement of it all. And if he does, we will be covering it live on the show as well. Okay, so why stop? Let me see your reaction to that clip as well. What's everyone said? A little like Gollum, says KC. He did a poll earlier. We'll do a poll, yes or no. Yes, there is sort of a poll running. We'll run it again. I want to do one after we do the full analysis so everyone has all the information. What do you think, Sensei? What do I think? I don't know. I don't have. Let's finish the analysis, then I'll have to give you an opinion. Sensei, do we have any more live feeds coming from Trump on the Fed decision? Yes, we'll be keeping an eye on everything. 1978 Buckley, I call it two wings on the same dirty bird. Our national bird should be a buzzard. Slowpoke Powell Ropo says, lol, he even had the letter ready. I know, it's so funny, isn't it? Vivian said, Sensei, I think there's another rate. I think there'll be a rate hike in March. Another rate. What do you mean another? There hasn't been a rate hike. I think there'll be another rate hike in March. I need your thoughts on 2 points. One, who is really behind the market being so gloomy and down currently? What's really behind the market being so gloomy and down currently? One of the things is the Fed chair. There's uncertainty. There's the senators not allowing the new Fed chair to come in until the uncertainty and the probe by the DOJ is finished. We had a lot of euphoria in the gold and silver markets. We have we just had the inflation data, which isn't looking too great either. It looks like we might be holding rates for much longer than expected. And also the market's just cooling off after a run up. Casey said 1980 Buckley. Human Being List says he has a great voice no matter how old he is. This came from us. Yes, Franklin, that's a good quote as well. Human Being List says Powell. Vivian says number 2. Is it now a good time to buy crypto? Or June would be better. Vivian, I don't give financial advice. I'll give you my thoughts on the market though. Essentially, I put Bitcoin, Ethereum, XRP, and potentially Solana in one category. Maybe you can throw in ADA in that category as well, which is the main coins of the crypto market, which are probably not going to go anywhere. For them, I buy at specific chart levels. I publish them on the newsletter. You can check them out on do the chart course, and you can figure them out on your own. I buy them maybe every 20% drop, but at technical levels. The reason I buy at technical levels is because if we have a big swing towards the upside, I can have a decision to sell it or keep it for my spot bag, depending on how much I have and the ratios of the cryptocurrencies. On everything else in the crypto market, if you're looking at Matic, I don't know, Flare or XLM or Audius, whatever smaller cryptocurrencies there are out there, because we're in a bear market, I just buy every 50% drop. I don't know when the bottom is. I can give guesses. I can give indications of when I think there's an altcoin season. Right now, I don't think there's an altcoin season. Right now, I think we're in a severe downtrend. And I just think the market could have short squeezes as well. So for those altcoins, I just buy every 50% drop because I can't time the bottom. I want to be in them, but I don't want to buy every 5% drop. So that's what I'm doing in the crypto market. Is now a better time or June? I don't know the answer to that question. I think we'll go down further when we get into the year. But I don't base it off just times. I base it off price action and also sentiment. We've got a special guest calling into the show, so let me go straight over to that special guest. Let me see if I can bring you on the screen in 3, 2, 1. Martyn, welcome to the Morning Forecast Show. How are you doing?
Good morning, Sensei. Thank you for the great show this morning. You might notice the studio is looking green behind me. There's reason for this. Well, guess what, folks? Yet the market's down, crypto's down, but we've managed to win again. As you can see, I don't know if you can see that on your screen. Are you able to? No, you probably can't see it because it's this is on my full screen. But I'm up again today, beating the market by a long way, and we're making money again. So there we go. So join me in about 10 minutes live on the show. We've got a lot to just talk about. We're going to cover Jerome Powell's speech, of course. But over the night, I was up all night again last night. Sensei said, I don't know how you do it. I was up all night last night, reading the papers, studying everything, had a good idea who would win this morning, and I've got my own personal views on it, and I've beaten the market again. I'm up nearly $1,000 already this morning with just Coca-Cola, XRP, and Bitcoin, and the S&P, Coca-Cola, and XRP. And as you know, they're all down. So how have I done it? Join me live and you'll see. If you can you make me full screen, Sensei? Is that possible? If you can't, don't worry.
I'll try. I was trying to figure out how to do it, but
what you do is go to where your camera one, all right, and just change the camera, just change the guest. That's it. And now go to guest number 1, me, and you'll see my name come up. And I'll just, there you go, spot on. That's how you do it. Save that as a scene. Right, look at this now. I'm sharing on the screen. Oh, it's just moved down a little bit. We were $1,000 a few seconds ago. 529. We just trimmed back a bit. Sorry, 516. There's my position. I don't know if I can see it on the screen. Oh, there's a delay, isn't there?
It's just you. I can't see your. It's just you.
It's just me. Oh, hang on. I know why. I got to change my camera, ain't I? I daft. I need to be using this one. That's why I couldn't see it. Can you see it now? Is that better?
Yes. It's as if it's your own show.
Spot on. So as you can see, we're up again today. Now, overnight, I did share in Discordians and Electrum what I've been buying. Senza, you'll love this. You're a crypto man, aren't you? Look how much I had. I've got nothing, and now I got $30,000 in XRP with an average. You like that? Yeah, I thought you'd like that. $1.80. I'm hardly out of the money at all. But remember, this is important. No point saying, look at me, aren't I smart? Remember, I sold at 190 for a tax loss. So until I pass 191, not really in the money. It's very important. I might be in the money in 5 minutes, and everyone goes, look at that. He's done it again, but it's not really true. Until I pass 190, I'm not really in the money. But I did it for a reason. I sold and bought back lower. So technically, it's not really a win until I get to 190, which of course we will. I've got no doubt about it. But anyway, I bought a ton of Coca-Cola, a ton of the S&P 500, and as you can see, it's bouncing around a little bit. We're up today, which is pretty good considering the markets are all down. Anyway, Sensei, send me back to you again, just so we can talk together again. That would be nice. There you go. Lovely. Save that as a scene now, Sensei. So when I call it, I can just take over the show whenever I like. Anyway, so join me in a few minutes' time, and we're gonna have some fun today because I'm going to give you my opinions of why this is, and you know what I'm going to say. We're beating the market again. But anyway, there it is. And there's a lot to this I like actually, because like I said, inflation is sticky. We might not get rate cuts. We've been saying for a year now, and we might even see the odd rate hike. I don't think we're going to see that, but by holding up for longer does the same effect anyway. But I'm very excited about what's coming up for XRP. I've got a few little tips and winks there being shared with me. So that's why I bought 30 grand of XRP, and I will be using tax lots to trim. And I'll be building to 100,000 lower, not at these prices. So, don't be surprised if I do trim the higher lots at 192 and keep the 170, 79s and 180s, whatever. Anyway, that's it from me. Sensei, I want to congratulate you. You're so humble on this. You never mention it. Sensei is number 2 bestseller in the world for a newsletter on Substack, which is the number 1 place for newsletters. He doesn't talk about it. I do all the shouting for him. I can't believe it. He's so humble. Number 2 in the world, a bestseller. And I wouldn't be surprised by the end of the day, you are number 1, because I know lots of people are interested in your newsletter. And I wouldn't be surprised on my show today, a few people buy the newsletter. But number 2 in the world, bestseller, I mean, that's no good, Sensei. We want number 1. That's where you deserve to be. The newsletter is fantastic. I read it every morning. I use it in conjunction with all my information and my sources, and it makes me very confident in buying the market. And maybe, Sensei, your newsletter is the real reason why I'm always beating the market. Don't know. What do you reckon, Sensei? What about this challenge you're starting?
Definitely, that's the reason. It's not.
So what's
it's not all the information you have and how you trade. It's all the newsletter, Martyn.
No,
thank you.
Nothing to do with me. You know this target you're doing, this challenge, 5,000. You're starting with 5,000. Yeah. What's the goal, Sensei? Mine was 1 million. Are we setting 1 million? What are we doing with the 5,000?
I think the goal first is to catch up to 300,000, and then eventually, hopefully, 1 million.
Spot on. I love it. Great stuff. Well, love to your dear wife, soon to give birth to your first baby, your first child. So everyone sends their love to you and support for all what you're going through and what you will be going through. So all of us support you and so on. So thank you again for doing an extra long show today, giving me a bit of extra time in bed. I wasn't exactly in bed. I was up all night. Then I just kind of closed my eyes and had a cup of tea for 10 minutes and I'm back on it again. But thank you for covering that. I'll be live live in about 5 minutes. Please run over if you want to. You've got a great audience. When you're finished, when it's right for you, send to me. I'll cover the opening bell. And if you can keep me updated, Sensei, if you do see when Trump is speaking, if I do miss it, I'm sure you will let me know. One of us will cover it. We want to cover that today. But a lot going on. Very exciting to be in the market. Always be in the market. Despite whatever comes, you can always make money. And here we go again. Sensei, back to you. Thank you once again.
Thank you, Martyn. We look forward to your Morning Bell show. Okay, that was Martyn on the show. Always great when we have Martyn calling in. We'll be pivoting over to Martyn, who will be covering the Morning Bell or the opening bell in a few moments' time. Thank you, everyone, for all your support. Yes, we did hit number 2 on the bestsellers list in Substack. All thanks to everyone who subscribed. Thank you very much. We do try our best with the newsletter, and we are making it better and better every day, and I'm glad all of you are enjoying it. I mean, let me just go over here. There was a great response yesterday. We've got this community page where we all talk with each other within it. So remember, if you're a premium member, make sure you've got the app so you can go and do it. You can do it on the website as well, but it's always easier on the app. We had a few questions coming in, and then yesterday I said this. Hey everyone, leave a reaction and comment in this thread if you want the first newsletter in the Portfolio Challenge Portfolio Challenge series to come out today. Welcome all new members. And we got a massive response. Everyone said, yes, 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 get it out, get it out. And what did we do? Moments later, we released the number 1 newsletter in the Portfolio Challenge. So the £5,000 Portfolio Challenge entry number 1 came out, but everyone's waiting for entry number 2. I gave a little snippet of what entry 2 is about. It's all about copper and how those buyers are coming. Everyone's starting to enjoy that. That series has kicked off. Next, we've got the the net worth tracker with the budget planner, debt planner, and then we've got the chart analysis course. So number 1 done, 2 more to go. Copper newsletter coming out this weekend. If you want to get it, right now we're running 25% off. So what I'll do is give you the link to that. Go and grab it. I'll probably give Martyn a link as well to keep that running if we don't get the next person signing up. So there is a link to newsletter. Go and grab it. Of course, that's only one part, but you get the daily newsletter as well. So I'm going to give you 5 more minutes of analysis. Then we're going to explain portfolio challenges. If you go into the newsletter, I mean, we've got a full newsletter out on it. I give you some in the chat, but if you actually go to the newsletter, you get the £5,000 portfolio challenge. The first newsletter was explaining all about it, what we're doing, the live research, the mission, what I'm trying to do. We're trying to grow the portfolio again. It's not a copy me series. It's a very much, here's the analysis, here's the research, this is why I'm buying, what I'm buying, this is the framework. Again, I give you my step-by-step way of investing in stocks. So that's kicking off. You piqued my interest. Yeah, it's going to be very fun. It's going to be very fun. I don't know. Are we going to win? Are we going to lose? Well, we always win. If we lose, we lose. Whatever. I don't think we're going to lose though. This is a long-term portfolio anyway. So we will yeah, it's going to be great. It's going to be fun. It's a challenge. I don't recommend anyone follows me, but have a look at the research, see if it applies to your own portfolio. Let me just quickly wrap up. We've got 4 minutes before we'll go over to Martyn. Let me just click on his link and see when his time is running out, and then we'll be live. Okay, we've got 6 minutes before Martyn is live. So, why stocks fell despite the rate cut promises? Let me just make sure that's there. Here's the paradox. Walsh promised the rate cuts Trump wanted, yet stocks dropped 0.5 to 1% of the news. The sell-off reflects 3 concerns that outweigh the rate cut appeal. First, markets were pricing in someone even more dovish. First of all, we actually had different names in the mix. If we go over to, where was it? We go over to trending and go over Fed pick nominee. A short while ago, we had people like Kevin Hassett, who was going to be the Fed chair pick. He was even more dovish than Kevin Warsh. So that was what the market was pricing in. So also people like Rick Rader, who would cut rates without the balance sheet reduction baggage. So he wants to cut rates, Warsh. However, he also wants to cut, well, he indicates that he wants to cut the balance sheet, which is essentially ending QE. Secondly, there was skepticism about his conversion. Warsh spent a decade warning that loose policy creates bubbles and inflation, many traders believe his first instinct is hawkish, and once confirmed, his true colors will return, especially if inflation ticks up or AI productivity theory doesn't pan out. The market is essentially saying, we'll believe the dovish talk when we see it. So the market is not convinced how dovish he is based off his past actions. Thirdly, and most importantly, it's the balance sheet problem. Warsh, which is confirmed as the pick, isn't just promising rate cuts, he's demanding the Fed aggressively shrink the $6.5 trillion balance sheet, which he views as a Wall Street subsidy. When the Fed sells bonds or lets them mature without replacement, it drains liquidity from the financial system. The quantitative tightening typically pushes long-term yields higher, creating a curving steepening effect. So even if short-term rates fall 1 to 2 percentage points, as he promises, or he's said in the past, 10-year Treasury yields might rise, and that's when mortgages go up. And that's when what really drives the stock valuations down. So higher long-term rates means future corporate earnings get discounted more heavily, compressing price to earnings multiples, especially for growth and tech stocks. That's why the market is uncertain about him. They've heard things about him in the past. They've seen how he's been hawkish in the past, and now he's trying to be dovish. Now they don't know what he's going to do with the balance sheet. There's just uncertainty in the market, and that's why the market's down. So market implication across asset sheets, we've got dollar jumping up, gold and dropping, Bitcoin dropping based off those fears of the balance sheet reduction. What does this mean for your money? If Warsh AI bet plays off, we could see sustained economic growth with falling short-term rates. This is a Goldilocks scenario for equities, particularly tech stocks driving productivity gains. Small and mid-cap banks could benefit from promised regulatory easing. So that's great. That would be great for the market. Goldilocks economy stays. Inflation under control, unemployment under control, low rates, brilliant. But if he's wrong or his hawkish nature returns, expect volatility. Higher long-term yields would pressure growth stocks and real estate. The crypto market faces headwinds. The confirmation of the wildcard, Senator Tom Tillis, the one we just listened to right after we got the inflation data, is blocking all Fed nominees until Department of Justice ends this investigation into Powell. With a narrow Senate Banking Committee margin, this could derail or delay Warsh's appointment significantly. A prolonged vacancy would expend policy uncertainty and market choppiness. Watch the confirmation hearings closely. Warsh's answers about his policy flip and independence will tell you whether to bet on his dove or prepare for the hawkish return. Sorry, I'm still here. What have I done? Oh God, what have I done? Camera, let me go back to me. Okay, I'm not going to be able to do that. Let me just go here. So what does that all mean? Essentially, a lot of uncertainty in the market. That's pushed it down. The new Fed chair used to be hawkish. The market is wondering, is he going to continue to be hawkish? Even when he's dovish and he's saying lots of rate cuts, he's also suggesting the balance sheet and QE ends. Market doesn't know what's going on right now with his policies. That's why the uncertainty is bringing the market down. Pair that with Fed nominees being halted until the DOJ finishes this investigation. This is a breaking story. We're going to continue to cover it. We've got months to prepare for this, but be prepared for choppiness, volatility, and uncertainty. If you want the newsletter, we have just given 25% off for the next 2 people. So there is the link. We're going to go straight over to Martyn now. He's covering the opening bell. Let me give you the link to his show. He starts in 1 minute time, 30 seconds time. So I will put his link in the live chat. Thank you everyone for sticking with me throughout today's show, the extended show, the coverage of the new Fed chair and the inflation report. I really appreciate every single one of you, especially all the premium members of the newsletter. Thank you for all subscribing. Remember, there is a free plan to newsletter as well if you just want some of the highlights. Tomorrow, it's the weekend tomorrow. Pump the newsletter. On Monday, we'll do some more Q&A and maybe I'll be back later with some more analysis. Until next time, the link for Martyn's show is in the live chat. Click on that, go to Martyn, tell him Sensei sent me. Take care of yourselves and each other. Go straight to Martyn. He's live right now. If you stay where you are, in 30 seconds time, you'll be going over to Martyn as well. Until next time, take care of yourselves and each